Hello, everyone. Good morning. So today's topic that we are going to cover in detail is different types of candlestick. Okay, we already learned in the basic what is a candle, how a candle looks, what is a green color candle, red color candle. We'll quickly also go through that basic, and then we'll look at different types of candlestick that we are going to use. Now, totally there are more than 50 different candlesticks, but we are going to focus on only 11 candlesticks that are important. And out of those 11 candlesticks, once we study them, coming session, the next session, we are going to understand which of those 11 we are going to use, how we are going to use them, what will be the target for them, what will be the entry point, what will be the stop loss, all that we'll cover in the actual practical class. Okay, this topic, we are going to understand what are the different types of candlesticks and how they look. So just to start with the very basic first, what is a candle? We already know that a candle is used to identify four values: the open, high, low, and close of that particular period that the candle is representing. Then we also know that candle has two main parts. One is the body and one is the wicks. There are two wicks, upper wick and lower wick. Wick is also called as a tail or a shadow. So you can also say it's an upper shadow or lower shadow. The upper wick is used to identify the high of that period, whereas the lower wick is used to identify the low of that period. Then we also know that the body is used to identify the open and the close, but depending on whether the candle is green or red, that determines where is the open and the close. So the candle may be green or red in color, depending on the relation between the open and the close. You already know this much part, right? What is a green color candle? A green color candle or a white candle means that the price has closed above the opening price for that particular period. Means in the body, the lower part of the body is the open and the upper part of the body is the close. This is a bullish candle because in that day after opening, the price must have gone up to close above. That's why we call it as a bullish candle. Bottom of the body identifies the open and the top of the body identifies the close. That is a green color candle. Exactly opposite is the red color candle. A black color or a red color candle means that the price actually closed below the opening price for that particular period. So it's a bearish candle. Once the price opened, it actually went down during the day and closed below the opening price. That's why we call it as a bearish candle. It's a black color candle or a red color candle. That's the difference between the two candles. In this particular example, the top of the body identifies the opening price and the bottom of the body identifies the closing price. Okay, so this is what we have learned so far. Now we are going to go ahead and learn the different types of candlesticks. The first candlestick that we are going to learn is doji. Somewhere in our previous classes, we already spoke about doji, but today we are going to understand it a little bit more about it. What is a doji candle? It's the most easiest to recognize, very simple candle to recognize. Why? Because when we have a doji, we have the price opening and closing almost at the same level. When the price opens and closes almost at the same level, that means the body of the candle is very small, or if it's exactly the same, then the body of the candle will be a thin line. It will be a straight line. Okay. So when the open and the close are very same level, the body is either very thin or it's a straight line, and that is what a doji candle means. As simple as that. So the doji candle, what is happening inside the candle, let's understand. When there is a doji candle formation happening, means after the opening and the closing, which is at the same level, it doesn't mean that the price didn't go anywhere, right? The bulls must have tried to take the price up, then the bears tried to take the price down. But finally, after the fight between the bulls and the bears, ultimately, no one was able to win. And because no one was able to win, this candle doji indicates indecisiveness. It shows us that it's an undecided candle. At the end of the day, there was no winner. Like it's not a green color candle, it's not a red color candle. There is no clear winner. The bulls and bears are still fighting, and they have still not been able to identify who the winner is. These are the different four types of doji candles. There can be many. The main idea is open and close is the same. The doji candle has a reversal character only when it is formed after a prolonged move. What it means is that let's say the price is continuously going up, and then you find after a long move, you find a doji candle. Means what is happening throughout the entire move upwards, It was all green color candles. It was all bullish candles. The bulls were in power. And then finally comes a doji, which shows that now it is undecided. Now the bears are also equally strong at this level. The bulls are no longer able to close the candle in green. It's a flat candle. That means that the bulls are losing their power. Okay, to some extent, they're either losing their power or they're taking a pause. Because we cannot be very sure whether they have lost their power, and now the price is going to go down, or whether it's just a pause for the bulls, and after a couple of days of pause, they will again come back. Because we don't know that exactly, that's why we don't consider doji for any trading purpose. We only consider it as a sign that the existing prolonged move might be losing steam, and that the opposite party, the bears or the bulls, the opposite party, are coming with equal strength. And at the end of the day, it is undecided where the price will be. We have to be flexible, even if there is a wafer thin body. It's a small bodies, they're open and closed, there's a difference of, let's say, 0.05% difference. We can still consider it as a doji candle. What happens internally, let's see, in a doji candle, the opening price is over here. Then the price is moving up. Let's say the bulls are in power. They are taking the price slowly and steadily up. They are winning the battle. They take it up to a level. And then the bears come in. The bears coming, a high is formed. They start taking the price down. Now the bears are winning. They're taking the price totally down. The bulls are not able to control. They take it all the way down till the lowest point. And then again, the bulls come in. They take the price up and they close at the exact same level. What happened throughout the day? The bulls were in charge. The bears were in charge. The bulls again came back. Finally, at the end of the day, nobody won. This was the high and this is the low. And a flat line has been formed. Very close to a flat line is also accepted. This is the idea of a doji candle. Okay. Now we'll move on to the second type of candle. The second candle is the spinning top. The spinning top looks very similar to a doji. The only difference is it has a little bit of a body. It has a very small body. A spinning top also we require is it should have a long upper wick and a long lower wick. So it has a very small body and longer upper and lower candle wick. Right? The color of the spinning top doesn't really matter. What matters is it looks like a top. As a child, we used to play that with the top, spinning tops. That's why the name spinning top. It has a lower wick, it has an upper wick, and the body is very small. Again, what has happened inside this candle is, again, the same thing. It has an undefined character. The reason for this is that this candle indicates that buyers and sellers are fighting hard against each other, but none of them could gain significant dominance. Of course, it's a green color candle, means the bulls have won. If it's a red color candle, the bears have won. But it's not a very big body. It's a very small body. Because it's a very small body, that means they won, but not with a lot of significance, not with a lot of margin. The wicks on the upper side and the lower side are approximately the same size. And what you also understand is during a downtrend, this candle means, let's say there's a downtrend and then you see a spinning top. This means that the sellers are losing steam, even though buyers are not able to win significantly as well. We have to be prepared for both the situations. After a spinning top, it can either be a reversal or there can be a continuation. After a spinning top, there can be a reversal or there can be a continuation as well. Okay. Let's look at the psychology behind how the spinning top is formed. Similar to doji, this is the opening price. The price starts moving up. The bulls are again in control. They're taking the price up. They take it to a certain level. They form the higher wick. But then the bears come in. They start taking the price down slowly and steadily. The entire power that the bulls have shown is totally reversed by the bears. And it takes it down to a very low level. But again, the bulls come in. They come in charge. And not only come in charge, they close it above the opening price. And that's why we call it as a green color spinning top. Where this is the high and this is the low point. And this is how a spinning top looks. Again, the bulls and buyers are fighting just like in a doji. The close is definitely green, but not significant. That's the second type of candle, the spinning. Now let's look at the third candle, which is the Marubozu candle. A Marubozu candle, they are basically means in Japanese. The name comes from a Japanese candlestick. So in Japanese, Marubozu means bald. Means the Marubozu candlestick has a body, but it has no wick or a very small wick. It's like ball with no wick, no hair, or very small hair. So bullish Marubozu will be green in color, a bearish Marubozu will be red in color. Marubozu is a trend continuation candle. When you see a bullish Marubozu, green color candle, that means the bulls are extremely strong since the opening till the closing. They have been taking the price one way. And at the end of the day, it has closed in a very nice green color candle. Or if it's a bearish Marubozu, that means since the opening, the bears are taking the price down continuously and it has formed into a bearish Marubozu. So what we are seeing is inside the day, it's a trend continuation. It does not matter what the prior trend is. Before the bullish Marubozu, doesn't matter what the prior trend is. The action on the day of the Marubozu candle suggests that the sentiments have changed. Something has changed, the sentiments have changed. The stock has now become either bullish or it has become bearish. We have to avoid taking any trades on candles, a bullish Marubozu candle, which is either too short or too long. Now, why is that? If it's a too short bullish Marubozu candle, that means it is not a very significant victory. Of course, there are no wicks or very small wick. It's not a very significant victory that the bulls have. And if it's too long a bullish Marubozu, we cannot enter into that also, because if it's too long, that means the price has gone up too much. And now there is no point chasing the price. So that's why we do not enter into a very small bullish Marubozu or a very long one. We prefer to enter into a medium-sized bullish Marubozu. If it's a long bullish Marubozu, you have to use the pullback method. You have to wait for the price to pull back a little bit so that you get a good trade. How does it form? Bullish Marubozu, let's say the opening price is at the bottom. Throughout the day, what is happening? The psychology of this candle is throughout the day, since the opening, the price has not gone below. Or even if it has gone very little because it's a small wick. And full day, the price is going in one trending direction and going upside. And finally, it closes at the almost high of the day. The closing of the price is almost at the high of the day. That's why this shows one-sided trend in the bullish Marubozu. The high is very close to the close, is almost same as the close, and the open is almost same as the low. This signifies a very bullish Marubozu candle. Okay. Now, if we look at the bearish Marubozu candle, if we look at the bearish Marubozu candle, you will find exact opposite behavior. The opening is at the top, and on that day, the price continues to fall down. There is a one-sided movement. Any up move comes, it is again taken by the sellers and taken down. Any up move comes, it is again beaten by the sellers. The sellers are coming in, overpowering the bulls, and finally taking the price down. And ultimately it closes at a level which is at the very bottom and which is almost same as the low of the day. So if you see the high and the open are almost the same because there's a very small wick at the top, and the low and the close are almost at the bottom of the day, which indicates that the sentiments of that entire day were totally bearish. Okay. So this completes our third type of candle, which is the Marubozu candle. Now, before we go and look at the other types of candles, there's a small concept that I want to explain to you, which is called as the headline of a candle. What is the headline of a candle? When you look at a candle, if the candle has a very long wick on any one side only, the body and the long wick, the place where it is connecting, the point at where it is connecting is called as the headline. So headline is nothing but the point connecting the longest wick with the body. Let's say if you have a long wick on both sides, like a spinning top, then you don't have a headline. It is only when there is only one wick which is very long and the other wick is either not there or very small. In that case, you have a headline which is nothing but the line connecting the long wick with the body. You can see all the four examples. In the first example, the red candle, you can see the body is over here and the long wick is at the very top. You can see that, the body and the long wick is connected by this blue line. That blue line is the headline. All the green examples you can see, the long wick is on the upside, then the blue line is at the close. If the long wick is on the downside, the blue line is at the open of the candle. So always understand one thing, the headline the blue line, it may be the opening price or the closing price, depending on which wick is long. If you see the last example, the red candle, because the long wick is at the bottom and it's connecting with the body at the close point, that's why the blue line is at the closing price. This headline concept we are going to use when we do the future candles like hammer, shooting star, pin bars. In all of these, hammer comes into play. Today, we are going to understand only the concept of headline. In the next class, we are going to understand how to use headline for our entries, stop loss, and other things. Okay. Let's move on to the fourth type of candle, which is the hammer candle. The hammer candle is a green color candle, and it has a very small body, and it has either no wick on the upside or a very small wick on the upside. And it has a very long lower wick. This is what describes a hammer. Length of the lower wick or the lower shadow should be at least twice the size of the length of the body. So if your body is, let's say, 10 points, your lower wick has to be at least 20 points or longer. That is what defines a hammer. When you look at that hammer candle, it feels like a hammer you're holding in your hand. A long wick, a long danda, and then the top of the hammer. So a hammer candle also classifies as a reversal candle. Hammer indicates the reversal of a bearish trend. If the price was continuously falling down, and then you have a hammer candle, right? So in a hammer candle, that indicates that the price that was continuously falling down, now it might reverse. In a hammer candle, you can see this is the headline. The long wick is on the downside, and the body, the line connecting, the blue line connecting the long wick with the body is at the opening of the hammer. So that is the headline. Let's look at in detail how a hammer is formed. Let's say the price is continuously falling down and then it opens over here. And because it was continuously falling down in the last bearish trend, it continues to fall down on that day also. The price is continuing the journey of the bearish trend. But then at the bottom comes a lot of buying power. A lot of institutions starts buying and they reverse the price. Not only they reverse the price for the day, they take it above the opening price and then close at the very top. They close above the opening and create a green color candle. That means the bulls are not only strong towards the fall for the day, but also close at the top, making that at the high and that as a low. So at the low point, we have got the bulls coming. Okay. This is the psychology behind the hammer, and that's why we consider it as a good candle. Okay. Let's look at the fifth type of candle, which is the hanging man. A hanging man is a red color candle. It also has a long lower wick, just like the hammer. It also has a very small or no upper wick, and it has a small body. Everything is like the hammer, but the color is red. Just because the color is red, the whole psychology changes. Lower wick should be at least twice the size of the body, just like the hammer. Hanging man is also classified as a reversal pattern, but it is not a reversal pattern after a bearish trend. It is considered as a reversal pattern of a bullish trend. Let me explain to you how. Let's say the price was continuously going up. It's a bullish trend. And the price opens over here. And then, after going up a little bit, the price totally collapses. What is happening now? Bulls were in power so far. And now suddenly the bears have come into power. Of course, the powers of the bears is short-lived. At the lower level, again, the bulls come in. They take the price up. They continuously taking the price up. But unfortunately, they are not able to close the price at the opening level or above the opening level. In the previous trend, because it's a bullish trend, the price was continuously becoming a green candle and going up. But now, for the first time, the bears have come into power. They've taken the price down. And when the bulls again try to take it up, the bears were still strong enough to not let the bulls close above the opening, create into a green color candle, create it into a hammer candle, which means that when you see a hanging man after a bullish trend, it is a sign that the bulls are now losing their power and the bears are starting to gain power. But it doesn't very strongly tell us that from now onwards, the trend is going to fail. So even though it is called as a reversal candle, it is not a very strong reversal candle. Okay? This is the high of the day and this is the low for. All right. Let's look at the next candle. Candle number 6, inverted hammer. What does the inverted hammer look like? Exactly reverse of a hammer. So it's a green color candle which has a long upper wick. It's a mirror image of the hammer. A green color candle with a small body, small or no lower wick, and a long upper wick. In a hammer, we had a long lower wick. When we reverse it, we get an inverted hammer. Again, the same concept applies. The length of the upper wick has to be at least twice the size of the body. Inverted hammer again is classified as a reversal pattern, but let me show you why it is not a very strong reversal pattern. Okay. And what it indicates is it indicates the reversal of a bearish trend. So let me explain. Let's say the market was continuously falling down, and then we have this opening price. The price opened, and then it started to just go up. It kept on going up. That means in a bearish trend, now the bulls have come into charge. The bulls are taking the price up, They form a high, obviously because it's a bearish trend. The bears come in, the sellers come in, they take the price down. But unfortunately, they could not take the price down enough to close below the opening. If they close below the opening, it becomes a red color candle. That means it's a bearish candle, but it closes as a green color candle. From the high, the sellers came, but they could not take the price down. They could not reverse the entire bull's power. So the bulls that came from the low, they are still in power at the end of the day. That is why inverted hammer may be a reversal candle in a bearish trend. Okay, once there is a bearish trend and if you see an inverted hammer, there is a possibility of reversal. Why is there just a possibility? Because still the sellers came. At the end of the day, the sellers came. Maybe they did not get enough time to close below the open. Maybe the next day they will close below the open. So that's why inverted hammer is a reversal candle, but we have to watch it very carefully. We cannot consider it as a place to buy or sell. We'll learn in the next class more about it. Next candle that we're going to talk about is a shooting star. A shooting star is a mirror image of the hanging man. In the hanging man, we had a long lower wick, red color candle. Here we have a long upper wick. Again, a red color candle with a small body, no lower wick, and a long upper wick. Again, the long upper wick has to be at least twice the size of the body. And it is also classified as a reversal pattern. Now, shooting star points to reversal of a bullish trend. Now, let's understand this also. If there is a bullish trend going on, and then you see a shooting star. So let's see what happens inside the shooting star. Once the price was going up, it's a bullish trend. Then the price opened over here. The bullish trend continues. The bullish trend is continuing and it is going up. It goes to a new high, creates a new high. But from that high level, what is happening is selling starts to come. The sellers become active, they start coming in. Not only they come in, they reverse the entire upmove that the bulls caused on that day. And finally, they close the price below the opening, creating a red color candle. So the entire long wick that was created, twice the size of the body, is totally reversed. And not only reversed, the price is taken below the opening price. That's why we consider shooting star as a very good candle, because the sellers came in with a lot of power, which signifies that the trend might change. And they were also able to close below the opening price. Okay, so that is our candle number 7. And now we'll come to the next candle, 8th candle, which is the engulfing pattern. So far, we have been seeing one single candle patterns. Now we'll be talking about candle patterns which are having 2 candles. First of that pattern is engulfing pattern. So let's look at the engulfing pattern. In the engulfing pattern, we have 2 types of engulfing, bullish engulfing and bearish engulfing. Engulfing pattern requires that the range of the second candle, what is the range? First understand. Range is from the high to the low. We're not talking about the body, we're not talking about the wicks. We are talking from the highest point of the candle to the lowest point of the candle is called the range of the candle. So the range of the second candle must fully engulf the range of the first candle. If the second candle that fully engulfs the range of the first candle is a green color candle with a good body, that means it's a bullish engulfing. When the range of the second candle fully engulfs the range of the first candle, and the second candle is a red color candle with a good body, then it's a bearish engulfing candle. The only thing we don't want to see is if the second candle, whether it's a green color or red color, it should not be a doji or it should not be a spinning top. What is a doji? When the open and close is almost the same. No winner. What is a spinning top? When the body is very small. Again, no significant winner. So we want to see the second candle should be engulfing the first candle range fully, but it should also have a good body. At least it should not have a flat body or small body. It should have a medium-sized body or a big body. Okay. The engulfing pattern is again used for reversals. Let me explain with a bullish engulfing why it is used for reversal. This is a bullish engulfing pattern. I have marked the high of the first candle and the low of the first candle. This signifies the range of the first candle. Now, let's say in the second candle, the opening happens anywhere. The price initially starts to go down. This is one example. It might start to go up also. Let's say it goes down. It goes and breaks the low of the first candle. And then the bulls come in and they start to take the price up. Not only they take the price up, they break the high of the first candle. They take the price higher and then close above. They close above the opening with a good sized body. When you see this happening, that means if the price was falling down and after the fall, you saw the red color candle, the first candle, the price has fallen down. On the second candle, the price was again falling down, but then the bulls came and they reversed the price totally. The price had gone below the low of the first day. And now the bulls came in, they reversed the price totally, not only reversed from the very bottommost point, they took the price above the high of the first candle. They made a new high and then they closed. So they were able to break the high. So they're able to take the full range from the very bottom to the very high. That's why engulfing pattern, this is a bullish engulfing pattern, is so strong candle. Okay. Exact opposite is the bearish engulfing, where the red color candle, the second candle, will take the price totally down. Now let's look at the next pattern, which is the inside bar pattern, which is also called harami. Now, why it is called harami? The word harami comes from an old Japanese word whose meaning is pregnant. Okay. So harami comes from the word pregnant in Japanese. Now, what does this candle signify? In this candle, the range of the first candle is opposite of the bullish angle. The range of the first candle must fully engulf the range of the second candle. Means, let's say the first candle range is formed. And then the second candle is formed, which is totally inside the range of the first candle. Means inside the high and low of the first candle. Then that becomes a harami candle pattern. Okay. Harami candle also signals a likelihood of reversal at a good support or resistance levels. Now, the good part about the harami candle is it doesn't matter what is the color of both the candles. So there is nothing like a bullish harami or bearish harami. Okay. What makes it into bullish or bearish is something we'll learn in the next class. For the time being, you have to understand that the color of both the candles is irrelevant. It doesn't matter. In this pattern, we call, because the second candle is inside the first candle, the range of the second candle is inside the range of the first candle. We call the first candle as the mummy candle and the second candle as the baby candle. Okay. This is what happens. This is the high of the first candle, that is the mummy candle. This is the low of the mummy candle. When the second candle is formed, it opens. The price is staying nothing, but it is staying inside the high and the low of the mummy candle. It is forming a new high, but inside the high of the mummy candle. It is going and making a low, but it is inside the low of the mummy candle. It stays within the mummy candle. That's why we call it as the baby candle. And this baby candle is totally inside the range of the mummy candle. Now, some people might think that the candle has to be inside the body of the mummy candle. That is incorrect. Listen carefully. It doesn't have to be inside the body of the previous candle. It has to be inside the range of the previous candle. Range is the high and the low. It can be anywhere. So right now it is showing inside the body of the primary candle, but this candle can be a little above as long as the high of the second candle and the low of the second candle is inside the high and low of the first candle. It is an inside bar. Okay, we are going to see a lot of examples of inside bar when we do the practicals in the coming session. The next candle pattern is a double bars matching lows. A double bar means again it's a two candle pattern. Double bars having matching lows. These are bullish kind of patterns because the lows are matching. Double bars are a reversal pattern mostly found at the end of a bearish trend. First candle is red, second candle is green. This is compulsory. See, in the first pattern that we saw, engulfing pattern. In engulfing pattern, the second candle color has to be green, but the first candle can be any color. In a double bar, bullish matching lows pattern, the first candle has to be red and the second candle has to be green. This is mandatory. Both the candles must have equal or matching lows. Second candle must have higher high than first candle. So once they have a matching low, the second candle is going up and it is either making equal high to the first candle or making a higher high. That's why this is double bar matching low is a pattern which is considered to be bullish. Body of the second candle, because we want this to be a bullish pattern, we will not accept if the body of the second candle is very small. It cannot be a doji, it cannot be a small body, it has to have a medium to long body at least. That is, it signifies that the red candle was followed by a green candle and there is a reversal of the entire day. Whatever the bears did on the previous day is totally reversed. It was not reversed on the rest of the day. If it was reversed on rest of the day, it will become a hammer. But afterwards, on the next day, it totally reversed that. That means the bulls are now in power. Okay. Exactly opposite of this is the double bars matching highs. This is a bearish pattern. Double bars are a reversal pattern mostly found at the end of a bullish trend. The price was continuously going up. It formed a green color candle. The first candle is the green candle. And then on the next day, there was a red color candle which totally reversed the movement of the previous day. Both the candles must have equal high. Both the candles must have equal high or matching highs. Second candle must have lower low. Second candle must have lower low than the first candle or at least equal low. That means the second candle has fully reversed the first candle, taken it down, and maybe it has made an even lower low as well. Body of the second candle, again, in this case, cannot be small. It has to be medium to long body. This is what we have for matching highs using a double bar pattern. This is a bearish reversal candlestick pattern. Coming to the last candlestick pattern, which is the pin bar. Pin bar is one of the most powerful and reliable candlestick pattern. It's very easy to identify also. Color of the body of the pin bar does not matter. Just by looking at the color of the candle, we will not say it is bullish or bearish. So color of the body does not matter. It can be green, it can be red, it can be anything. What matters is the wick. If the wick is on the upside, it is a bearish pin bar. If the long wick is on the downside, it is a bullish. Pin bar is a reversal signal and not a continuation signal. We use pin bar as a reversal signal. If the trend is going down, we see a bullish pin bar, the trend is going to reverse. The candle wick must be at least 3 times the length of the candle body. In the hammer, we said, the shooting star, hanging man, all these patterns, we said that the wick has to be 2 times the size of the body. But in a pin bar, we are looking at a very long wick. It has to be at least 3 times the size of the body. Bearish pin bar have a long upper wick, whereas bullish pin bar, they have a long lower wick. You can see in this example also. There is one more criteria about a pin bar. Just having a pin bar is not enough. If you want this pin bar to work, there is one more criteria to look at is the long wick of the pin bar. The long wick of the pin bar is protruding from at least 10 candles before it. The long wick of a pin bar is standing out. When I say protruding means it is sticking out, it's standing out. If you see in this example over here, the long nose over here is standing out. Previous 10 candles, if you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In the previous 10 candles, this long wick is not obstructed on the left hand side. It is standing out. It's clearly outside. It is not collapsing or engulfing or anything the previous 10 candles. It is way outside. So it has to stick out. That is one condition of the pin bar. This is a very important condition. Now, for example, if you look at this particular pin bar, this black color pin bar. Okay, if you look at this black color pin bar, it has a long bearish pin bar, right? It has a long wick on the upside, so it's a bearish pin bar. But if you see the previous 10 candles, it is not standing out. It has got obstruction on the left hand side. When I say it should have a clear view on the left hand side, nothing obstructing on the left hand side. Protruding means if you take the tip of the wick, and you protrude it on the left hand side, it should have a clear view, no obstruction at all. What happens inside a bullish pin bar? Let's see. In a bullish pin bar, the price was falling down. There is a downtrend, and then this bullish pin bar is formed. What is the psychology that is happening? Price opened over here. After a big fall, the fall continues. The sellers who are selling continuously, there was a downtrend. They are continuing to sell the price, and they're taking the price down, 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 down. And then finally, we make a low. At that low, what happens is bulls come into with full charge. The wick is 3 times the size of the body. That means the bulls have come up, and they've come up with full force, taken away all the selling, and closed above the opening of that day. When such a big up move comes by the bulls, they've totally taken away the entire candle and open on the above. That is a sign that it is a very powerful candle. This is the high, this is the low. That is why bullish pin bar is considered so powerful. So another few points that you need to understand about pin bar are, for bearish pin bar, where the long wick is on the upside, the price has to first be moving up, then a bearish pin bar is formed, then we can expect it to reverse. If the price is moving down and then you see a bearish pin bar, that is not accepted. Second important thing is a bearish pin bar, the closing price of the pin bar, no matter which color candle it is, we know it. The closing price of that pin bar must be within the body of the previous candle, or the closing has to be below the body of the previous candle. The closing price of the pin bar has to be within the body of the previous candle or below the body of the previous candle. That is for bearish pin bar. For bullish pin bar, price has to first move lower before the pin bar is formed. If you want that bullish pin bar to work, the price before it has to be falling down, and then you see a bullish pin bar. That is a good sign. That means it can reverse. If we don't want that the price is going up and then you find a bullish pin bar, it is not used as a continuation pattern. It is a reversal pattern. So the price has to be falling down, then you see this pin bar, you can consider it as a reversal, the price may go up. Second important thing, for bullish pin bar, the closing price of the pin bar has to be within the body of the previous candle or above the body of the previous candle. Because it's bullish, we're expecting that the closing has to be within the body of the previous candle or above. Okay, so these are the points. These are all the 11 candles that we have talked about. And these candles are very important candles. We'll see it in the next class, how to use these candles, what will be the stop loss, what will be the entry point, all of it. Okay, thank you.